Well, when the government slaps tariffs on foreign goods, who actually pays the price? Is it China or is it you? Because while the politicians boast about getting tough, your grocery bills are exploding, your IRAs in a free fall, and your so-called diversified portfolio suddenly looks like a house of cards held together with duct tape. Well, tonight we're joined by someone who actually understands how this works, not the think tank economists or the Wall Street cheerleaders, but someone who spent decades on the ground and in the markets watching global finance shift beneath our feet. Jonathan Rose is the CEO of Genesis Gold Group and Block Trust IRA. He's been trading on the London Metal Exchange, advising global banks, and helping Americans protect their wealth using tools Wall Street doesn't want you to know about, like gold, silver, and yes, even crypto. He's moved over $1 billion in IRA investments, and tonight he's here to help explain what's really happening behind the scenes, the stuff no one on CNBC is telling you, why tariffs might be the match, but the financial system, well, that's the powder keg. So if you care about your retirement, your savings, or just understanding why your dollar is buying less every single day, then you're going to want to hear what he has to say. Jonathan Rose, welcome to the show. Thank you so much for being here.
Kim, absolute pleasure. And you're right. What a powder keg of market insanity that we're in right now. I mean, where do we start? Tariffs, right? That's definitely the hot topic these days.
Tariffs, the big question is whether or not this strategy is going to work, right? I mean, you got Trump out there slapping tariffs on everybody. And there's just a giant question here. Are we going to stop feeling all of this pain? I mean, what do you think of these tariffs? Do you think it was a good idea? Do you think it's going to work out?
It's a dangerous game, Kim. It really is. I mean, President Trump has set this chessboard way in advance. I think he knows exactly what he's doing. When he addressed the nation just the other month, he said, expect short to medium term pain for long term gain. Well, we're seeing the pain now. I don't think anybody would experience that the pain would equate to a global economic meltdown. Even Jamie Dimon, CEO of JP Morgan, says, I fear that we are 60% chance or more now of a recession. I think the recession's at our doorsteps. The problem is this tariff is really a fishing bait for people to come to the table so we can renegotiate, because previous administrations' fiscal policies have left us with $36 trillion in debt and climbing. And debt does matter, which is another problem that's going to have to be addressed after the tariffs.
Yeah.
But with all the tariff wars that are going on, America is the biggest consumer of goods worldwide. And in fact, we pay more money, importing all these goods from other countries than any other country. So when President Trump ran his presidential campaign, a lot of it was on restructuring global trade. And I think people didn't really understand the full extent of what that meant, right? Like if people knew that their IRAs and 401ks would be in a free fall right now, maybe people would have a second opinion. But I think people who grasp what's happening realize is that he's trying to change the stage and re-level the playing field, because he is absolutely right that they've been sticking it to us, many countries, for many, many years, where it's been a lopsided tariffs where we're paying all the taxes and they're paying none. So really what's happening right now is a game of poker. And a lot of these EU countries are now beginning to come to the table and they want to renegotiate. They're ready to play ball. Now, China, on the other hand, I don't think they're ready to play ball. And as they said, they're ready to fight us to the end. So what does that look like? Trade wars, then it spills over to currency wars. And ultimately, the chess game where it could go bad is we start to see a devaluation of our currency, the devaluation of the US dollar. And it's just having an understanding what you have to have in your portfolio to combat that. Now, are trade wars good? It's like yes or no. Yes, it's good. It depends who you're talking to, because if you know how to trade within the markets, you can capitalize on it. But if you're the average retail investor, right now, you're thinking, no, this is absolutely awful. When I open up my statements, all I'm seeing is a sea of red and I'm losing money. How long will this go on for? Well, I can tell you, Kim, if it goes on and continues down this path, we're looking at, honestly, economic destruction.
How long do you think we can withstand? I mean, at what point does this need to turn around, would you say?
I think this needs to turn around pretty quickly. I mean, we can't go, if we go 3 to 6 months like this, we're going to see, companies filing bankruptcy, companies shutting down. Obviously, the goal here is to bring
goods
back to America. So we've outsourced everything.
That's what I'm trying to figure out. What is the goal? It seems like there's, are we trying to bring manufacturing back to the United States? Are we trying to even out the trade? I mean, is it another country's fault that we are a heavy consumer country?
Mm-hmm.
Is it China's fault? I like to buy a lot of stuff. So what is exactly the goal?
Yeah. So right now we're collecting $3 billion a day in tariffs, right? So those tariffs are we have to pay down this trade deficit. If we can't get to the bigger problem down the road, which is the trade deficit, that's the big ticking time bomb that's going to destroy all fiat currency and global trade worldwide.
What do you mean exactly? What do you say?
So we keep spending money and we can't pay it back. And our answer to not being able to pay back this money is to borrow more money. So being $36 trillion in debt, just to give you an example here, every 90 days, we are paying an absorbent, like $1 trillion in debt, just on the interest of that debt every 90 days. That's more than our US national defense budget for America. So we could never, big banks, okay, are kind of like Big Pharma. Big Pharma wants to get you hooked, right? And that's how they make their money. Big banks want to keep you in debt. They keep you in debt with, credit cards and fees and whatnot. And the government has got itself in a predicament because we've gone to free trade. We printed all this money. We can't pay back the debt that we issued. So the problem now becomes, it's like a credit card. What happens if you max out your credit card? You plead to your bank, please raise my limit. I need to spend some more. And maybe they will. But at some point, if you can't pay that money back, what happens? They cut you off. You can't get loans. Your credit devalues, and your credit is shot. That's what will happen to the U.S.
So just like a normal person, that means you have to bring in more money, right? You've got to pay down this debt, so you've got to hustle, get another job, become an Uber driver, and you've got to pay down this debt somehow. Well, with the government, there's only a couple of ways to get more revenue, right? And that would be you could tax the hell out of your people. Or you could tax the hell out of your people. I mean, what's a tariff versus you could do an income tax or you could do a tariff. Either way, you're taxing the hell out of your people.
Yeah, we're paying too much tax. Now, another view of this, obviously, to pay down the trade deficit and equal the playing field so there's more money coming in, right, to kind of pay our bills over here. But then another way people are looking at this is that right now that President Trump's purposefully crashing the market, so the Feds will have to react and cut interest rates. And by cutting interest rates, now that gives us an opportunity to refinance this $36 trillion growing every day in debt. So again, it could be the most absolute master plan we have ever seen in history. But then there's the flip side of it, where a lot of economists are saying, well, we're looking at all these tariffs. Where are these numbers coming from? Are we just taking it from face value, the general public? I mean, when I look at, some of these tariffs I think it was Vietnam. Yeah. I believe in Vietnam, we're paying 94%, but we're going to give them a break and cut them at 46%. So that's just one country. But the problem I have with these imbalanced tariffs is these different countries have different economy of scales. Right. So it's like, these countries are not America with the gross GDP, gross domestic product, and imports and exports and money making abilities we have. Our workers are specialized in different areas. Right. So, in Southeast Asia, they've got a lot of labor workforce and people's in factories. And, we want to bring those jobs back to America. But do people really want to be sitting in factories and have different unique skill sets in the West than they do over in Asia?
Well, and that's what I'm wondering about that. So you bring all this American manufacturing, you get Apple, let's say, to move their operations from China to the United States. Are people going to be working in manufacturing? Are people going to do it? I just don't know if Americans will say, hey, I got a factory job.
I don't think so, Kim. I really don't. I mean, when you look at the cultural aspect of it, how people are raised in different cultures and their work habits, and what their concentration of force looks like, it's very different from country to country. So you're right. Now, you can also make the argument, though, companies like John Deere, being established since the late 1800s, one of the backbones of an American company, is the tractor company. They started moving their plants from the Midwest over to Mexico. Why? Because cheaper labor force. So you can make the argument there that, okay, well, we don't want cheaper labor force. We still want American-made products made in America. So really what you have is a balancing act. But you said the word powder keg, right? And it literally is that, what's going to be the match that can kind of blow this all up in everyone's face. It's a very delicate game, but if you kind of zoom back out, you got to take small little bites of this. So the first priority here is to not have so much taxes being paid by the American consumer and grab some of that money back, hence the trade wars. Now, I personally think, sooner rather than later, these countries are going to come back to the table and renegotiate and come up with something a lot more sensible. They may not like it. As President Trump says, they got to take their medicine. They have no choice because these other countries can't survive a trade war like America could survive. And President Trump knows that. So short to midterm pain, long-term gain. And if he pulls it off, it's going to be, one heck of a play.
Why do other countries put tariffs on U.S. goods? And what goods are we importing out to them anyway? Or exporting out?
Yeah, I mean, there's obviously, cultural divide in Western products that may, whether it's, sports products or anything U.S. manufactured made that they want in America, American-made products, whatever the trend is that's being shipped out, people will buy. It's like, Americans want to bring in cheap products that are made overseas, whether it's car parts or furniture or food, right? There's a big market that flows both ways.
When I'm buying something, I'm not thinking, oh, I want to buy a Chinese-made sofa. I'm not thinking that. I just want that sofa, and so I'm buying that. That's like what I'm purchasing.
Well, you're buying that sofa, but that sofa costs a lot less to produce, right?
Right, but that's why I want it, right? So that's why I want that one. I want that one because I like the price tag. I like the look of it. I'm like, this is what I like. Okay, so I'm willing to bring that in. So what I'm trying to get at is these other countries, when they're, if they want to, what do we even make? What are we exporting that makes them say, oh, we want this thing from America? I don't think they're thinking, oh, I just want this because it's made in the USA. I guess that's my point. Like, I'm not looking at something and buying it because it's made in China or made in Vietnam. I'm buying it because I like the product. What are we offering product-wise that other countries are saying, I like that product, I want that product, and why are they then slapping a tariff on it? Whatever that product is.
Yeah, it's a great question. So, if you look at a lot of our goods that we export ourselves, it could be more natural raw materials, right? Such as steel, it could be oil, could be gas. So a lot of we're natural resources rich. So a lot of these countries that don't have these natural resources, they're going to export from us and have trade deals with us and vice versa. Now, are some of these trade exchanges fair? Probably not. Look, when this started with Canada, they started saying, well, we're going to put a tax on anything that we import from Canada, but we don't need their wood. We have our own forests, right? We don't need Canadian cars. We don't need their oil. We have our own oil. So in terms of holding the power, holding the cards, besides China, we have most of the stronger hands that we're going to hold in terms of natural resources. The only other countries out there that these countries can do deals with are countries such as Russia, right? Which obviously a lot of sanctions being imposed on them. So it's going to be difficult for these countries to have trade deals with countries under a lot of sanctions. And ultimately, you're trying to hit a global trade reset. That's like the whole idea of this. And if the global trade reset gets hit, then America's the long-term winner in this. But again, if you have investments tied to the market and you're seeing these seasonal changes and you're panicking, rightly so. Is it going to be a short-term fix? Is it going to be a long-term pain? I personally think it's going to be long-term pain. And knowing that, it's how do you prepare for the future?
Yeah, because it's going to be embarrassing for Trump. I don't think he's going to back down. I also don't think
No.
China is going to come to the table.
No, a lot of egos, right? So
Yeah.
they need to drop the E and more of the go here, right?
Right.
So again, when you look at President Trump, you know he's like a steel rod. He's not going to bend. I think he kind of gets a thrill out of the negotiation, the art of the deal, because a lot of the times when you are in negotiations, you're not putting out these negotiations in the media. You know, oh, they're dying to do a deal with us. You know, you don't want to embarrass the other side. So I think there's an element of decorum that still needs to take place where we're not televising all of these trade deals and putting every country's dirty laundry out there for everyone to hear. We definitely want a deal to be had, but I think it wants to be done where everyone walks away and they feel like they've won in some regard,
Right.
and not that they've been stepped on.
I mean, he's right. We have to do something. We could not continue on the way that we were going, and we have to do a course correction. We got to take our medicine, and it sucks, and it's definitely awful. And the question is whether or not the medicine's going to work. I mean, I think a lot of us are willing to suffer through the pain and say, well, we got to see. I mean, what other choice do we have at this point? All of these other politicians, and they've just allowed this to go on forever, and it's like they just fed us cake. And we got real fat, and now we have diabetes, and so gotta go on a diet.
He's doing the right thing. A lot of people don't like it, right?
Yeah.
But President Trump, this has to be done. We can't keep going on the way we are going, and otherwise it's going to be forget the word recession. Now you're looking at depression.
Yeah.
Right. So there has to be a line in the sand. We've had unfavorable trade deals for decades. And this has gone on since Bill Clinton was in office. I think it was under the NAFTA, the North American Fair Trade Treaty.
Yeah.
So this is a renegotiation of old policies that were bad that are being revisited, and it's just playing out on a global scale that everyone gets to see and unfortunately feels. But ultimately, I think we will come out of this as the winner. It's just a question of how long is it going to take? What type of economic damage will happen?
Well, I mean, I can't blame the other countries for slapping tariffs on us. I don't blame other countries for having tariffs. I mean, they're trying to protect their economies. They're trying to protect their industries. And that's what you should do. That's what we should have done. But instead, we did these free trade deals and just said, oh, yeah, we're just going to free trade with everybody. And then they continued to protect their economies and we didn't. And that's how we ended up in this situation. And then the strategy, and I never agreed with the strategy, it was the trying to instead bully China, for example, into changing its entire economic model. Being like, well, you have to now be an open market capitalist country and allow us in and allow us to like siphon and resources and allow us to make a ton of money off of your 1.5 billion people. I mean, and China was like, no, we protect our people, we protect our industries. We're not doing that. And so, you guys want to be free, open capitalists. We're going to come in and we're going to take advantage of that because you guys have set it up. You put everything up for sale. America put everything up for sale, including our politicians. All of our farmland, everything's up for sale in the United States. Anybody could come in and buy it. And that should have been protected, and then to say, and then we'll just go ahead and we can move all the manufacturing because there's no issue bringing the goods in. So you got all these American companies, like you said, John Deere, hightailing it out and saying, what does it matter to us? We can import it in it makes no difference. We just get cheaper labor. I mean, we did nothing to protect our economy, nothing to protect our people, nothing to protect anything. We just said everything's up for sale, make all the money you can, siphon it from the people, don't worry about it. Other countries didn't do that. Good for them. We should have never done it in the first place.
Yeah. And now we're paying the price. Absolutely, right? Everyth's for sale. Now we're paying the price. And we set a bad example. We've reinforced the bad behavior, and it's like a child. Once a child's very naughty, right? How do you reverse that? Well, probably a lot of therapy sessions and long-term pain. So it's the same here. How do we reverse all this bad behavior? And it's almost like we're ripping the Band-Aid off. It's going to hurt. right?
Yeah.
It's going to hurt, but ultimately it will heal. This is like a cruise ship, okay? Imagine that. Have you ever seen a cruise ship do a 360 turn? Imagine that in your head. It takes a long time. That boat takes a long time to rotate. So this is what we're seeing, and always on the market. One minute we think we have a deal. A trader, goes to the bathroom, comes back, and all of a sudden the deal's reversed and the market's plummeted again. So, traders are glued to their seats right now. It's highly volatile times. Again, if you're a trader and you like volatility, in some of our crypto plays, that's how we make money is on volatility. So for people like me, there's a part of this that we love. But if you're a retail investor and you're looking for security and safety during uncertain times, people move to assets like gold for higher ground, right? And that gives them the protection there. So again, it's knowing how to navigate in these choppy seas. And I'm just concerned that these choppy seas could turn into tidal waves.
Yeah. Okay. So let's talk about how do we protect ourselves? Like, what do you think the best move forward is? Because right now, a lot of us are watching our IRAs collapse. We're watching all of our savings. Crypto even has gone way down. So, I mean, I checked my crypto account this morning and it's cut in half.
Because you have that's because you have what we call as a buy and hold strategy. Like the market's evolved, and it's very important. We can talk about crypto first because, obviously Trump has paved the way by adding like a Bitcoin strategic reserve, where he's now adding assets like Bitcoin to the US Treasury. And Kim, that's huge. It's an absolute monstrous move that he's done, because he's basically telling us that Bitcoin is not only here to stay, but it's going to become mainstream. And even the US government is going to use it and recognize it as an asset. So all the top fund managers, big corporations are now in the Bitcoin trade. It's not going anywhere. But the problem with Bitcoin and adding it to your retirement up until today, and like you've just told me, is people, when it comes to crypto, can only do what's known as a buy and hold strategy, right? You buy it, you hold it, hopefully it's worth more when you sell it. The problem with crypto is that it doesn't have an opening bell. It doesn't have a closing bell. So it's traded 24/7, 365. So you could be asleep. China could invade Taiwan, who knows, right? An executive order could be signed and it sends the market into a tailspin, positively or negatively. And if you have a buy and hold strategy, then you're going to suffer. What we specialize in at Block Trust IRA is we teamed up with a company that was recognized as the #1 global trading strategy for Bitcoin. And what we do is we let people invest in assets like Bitcoin in their IRA, but we get these signals and we take millions and millions of data points. And these signals will be watching things like social media, microeconomic data, on-chain data from crypto, and it will tell us when to get out at the market near the top and then when to buy back in. So it limits the drawdown. So if we know the market's going to draw down, we get out, right? And then once it's bottomed out near the bottom, we buy back in. And we are the only company that has this technology. It's an AI tech, and hedge funds use it, institutional investors use it, but we've brought this AI tech to the retail market. So people who have IRAs and 401ks can now invest in crypto safely and securely, but also manage that risk and volatility. So when people are concerned with volatility, we love volatility because that's how we beat the benchmark and we make people money. So when it comes to crypto, it's fast, it's evolving, and you have to have the latest cutting edge tools in order to beat the market. And that's essentially what we do with cryptocurrency.
So walk me through that just like for dummies so I understand. So I call you up and I give you $1,000. I'm just wondering how this works because I'm a total, and most of us are idiots when it comes to crypto. So walk us through this.
I was involved in cryptos in 2014, 2015. I used to work for Merrill Lynch, Morgan Stanley. I've been financial traders for many, many years. And I got into crypto, wasn't 100% sold on it because I didn't see mass adoption, and I got out, right? And I was wrong. Had I have hindsight's 2020, I think a lot of people were, but people like me that then come back and become believers in Bitcoin, boy, are we sold, right? So now that I saw President Trump was getting in, a lot of people were asking me about Bitcoin again. So how do you buy it? Most people still don't know how to buy cryptocurrency.
Right.
I look at my father in England, and I tried buying it. I have no idea what I'm doing. So we created the platform. That's Block Trust IRA, and on that platform, people can buy over 60 different cryptocurrencies, Bitcoin, Ethereum, many others. And then the next question we get is, well, isn't cryptocurrency volatile? And I say, absolutely, it's inherently volatile. So that's why you want to have these managed tools. So when people roll over IRAs or 401ks or just have these cash positions with us, they've got a way to invest in crypto. But then with us, they have the ability to kind of like have a watchdog, almost like a security guard, sitting there, making sure that everyone isn't leaving the market. And if they are, we're going to take their position, put them back into cash, sit in cash, which is they can access it anytime. It's not locked up. It's not leveraged. And then we wait for the market to settle. Could be 2 weeks, 3 weeks till we get the buy signals. And then we buy back in for them. This is all done through AI and traders. And by having this type of technology and having these tools, it beats the old dinosaur fashion of just buying and holding,
right,
and pulling your hair out because the market's on free fall. When's it going to come back up? So our tech takes away that question, or when's it going to come back up, or it's going to come back eventually. So that's how we essentially, beat the market.
Interesting. Okay.
Yeah.
So then does a person have to actually know anything about crypto in order to invest in it with your platform?
No. That's the beautiful thing. You don't have to be a trader, or maybe you are a trader. And I say that I was a trader. I mentioned that because AI today, this isn't like a chat box AI. This is extremely sophisticated. We have the company we work with, they have servers worldwide, like massive Amazon servers. They're crunching millions and millions of data points. So I couldn't compete with the algorithms today like I could many, many years ago. It's just impossible. So you don't have to be an expert. All you need to know is that, hey, I want to learn about crypto. And I think education is key. So when people come to us, that's the first step, is we educate them. And then we explain to them how it works. If they have an IRA, they can do tax-free rollovers, which is amazing for cryptos because you get to defer and not get taxed on that stuff. And we basically watch it for them 24/7. They can access their monies anytime. And really, this is the key to investing in cryptocurrency. If there was another key, Kim, I would know about it. This is the only play if you've got crypto in your portfolio, because it has to be watched 24/7. There's no opening bell, there's no closing bell. It's not like a stock. Your financial advisor managing all your stocks, they go home, they eat supper with their family, right? Something could be happening in the Asia markets. They don't care about that, right? But with the crypto market, that does care. That does matter. So you've got to have these safeguards in place to manage risk. But when I say risk and volatility, we love that. That's how we make people money, is through risk and volatility. So, through President Trump kind of making that yellow brick road, so to speak, for gold, we're seeing a big transfer of wealth happening. And people want away from the measly 6 to 11% returns from the stock market, if that, with inflation, right? They're looking to kind of break those shackles. So, they can do that, become independently financially wealthy, in my opinion, over the next 3, 5, 10 years by what President Trump is doing, by paving the way for us to invest in crypto and have mass adoption. So, crypto, if you don't have it in your portfolio, you'll get left behind.
Yeah.
If you're looking...
You said that there's like 60 different types of crypto. Why would anybody invest in anything other than Bitcoin if Bitcoin's going to be the one that's brought into the reserve?
Yeah, you're like me. Bitcoin and Ethereum, they have big market caps. They have a lot of data points. They got a track record. You want a big market cap for a Bitcoin. I have Bitcoin and Ethereum, and our strategies are only on Bitcoin and Ethereum. Now, we do have access to like XRP, Solana, many other coins as well. And to me, Bitcoin and Ethereum is like the gold and the silver, right? That's your gold. They're dependable. They're not going everywhere. Everything else is either going to be higher risk, in my opinion, or they trade flat. If a coin's trading flat and there's not much movement, we can't make the type of returns for our clients with a flat market. We like a volatile market. But you're like me, Bitcoin, Ethereum's the future. Obviously, you hear other coins like XRP, Ripple, for example. They're definitely close behind. There's a lot of people that love XRP for many other reasons, and they want to get exposure to that. But myself personally, I'm mainly in Bitcoin, Ethereum, and a little XRP as well.
Okay. And then what about gold and so like actual physical metals?
Yeah, absolutely. So you can put gold and silver into a retirement account, and a lot of our clients through Genesis Gold Group are retired or retiring, and they want to make sure that money is going to be there when they need it, right? And when they're seeing these topsy-turvy markets, they don't trust paper. They don't trust these banks. So they want to have something tangible and physical. And when you talk about a commodity with a proven track record for over the past 30 years, look no further for gold and silver. Gold and silver has stood the test of time. It's never going to go out of fashion. And again, people feel comfortable and they understand that anytime there's market instability, currency devaluations, inflation, if you was picking up a tin and it was gold and you read the ingredients, it's doing everything it's meant to do, protect you from market downturn, protect you against international conflict, protect you against instability. So that's the tool that precious metals provide. And in fact, now the markets are crashing and these hedge funds are losing billions of dollars. They're actually selling gold and silver to cover their positions. So again, gold and silver is another great asset, very conservative asset that I think is going to continue to go up in value as the US dollar loses steam and we continue to navigate these tariff wars.
Yeah, so like gold, has it, like with seeing the markets go crazy right now, is gold also going crazy?
Yeah, gold's been on a tear. If you look at the 1 year, I always look at investments in 5 years, but if you look at, gold and silver, 1 year gains, they're up like, I think 30%, right?
Right.
The numbers have been staggering. So when people see instability and they're looking for security, they're looking at gold. And now I may add, Kim, that people mindset with gold, they're not going into gold because, we're going to make all this money with gold. That's the wrong mindset. Okay. Mm-hmm. This is preservation of wealth. You beat inflation, you beat the dollar going down in value. If we had $100,000 in gold and we counted out $100,000 in paper money, we came back to that stack 5 years, the paper money would buy less consumer goods 5 years down the road than it would today. But the gold would keep pace with inflation and be worth a lot more. This is historically proven.
Yeah, I'm just looking at the various different rates. I'm looking at gold rates and just trying to looking at even the 1 month.
So gold,
1 month
gold,
up 7%.
Yeah, up 7%. I don't get too tied down with the intra-day-to-day trading of gold. We have a little saying in our industry: you don't wait to buy gold, you buy gold and wait. Right. And that basically means buy it as an insurance policy. Rain's coming, pop up the umbrella. The umbrella's gold, so you don't, get drenched. And again, when you invest in gold, there's gold ETFs, electronically traded funds. There's gold mining stocks, and there's physical gold. And I always pick the physical gold because if you don't hold it, you don't own it. Right. Gold ETFs, electronically traded funds, you're getting exposure to gold, you don't own it. Gold mining stocks, if you don't mine any gold, you're investing in the board of directors as well. Many variables there, you may not make any money. So the best way to invest in gold, the safest way is to physically hold on to it yourself, keep it at home, or put it in a retirement account.
Yeah. And then I'm looking at the Bitcoin rate. I'm just kind of looking just to see how the markets are doing with each one. And Bitcoin is down, just looking at the last month, because that's when everything kind of went crazy. So Bitcoin's down about 9, almost 10%. Where I got killed is I have Ether pretty much exclusively. And that one is down 30%. I mean, it's just that one is gone. Why is that?
Sell off some fear. Pretty much, right? So just to give you an example here with our AI managed funds, just the past week alone, we saw, ETH and Bitcoin go down relatively 5 and 10%. We were up 5%, right? So it just kind of shows you if you have a managed account and you have these AI tools managing your crypto, you don't have to be pulling your hair out and saying you're down 30%, right? When Bitcoin was at about 100 and something thousand, we sold out at 99,000, right? And then we watched the market plummet all where it's down today. And then when people called us and be like, how comes I haven't lost any money? And we explained it to them. It was almost like a light bulb moment. People come in and invest with us and they think they know, but once they say the real case study scenario and they log on, they just can't believe it. They're like, oh my God, this is amazing. So again, you need to have the tools, the right tools, so you can mitigate this drawdown in the crypto market, because that drawdown can actually be a gain for you if you're working with the right people and you know how to navigate that.
Yeah, so what do we do now? Because all of us are watching our everything crash. So do we pull it out now while it's all worth nothing? Or do we wait?
No, you wait. Yeah, you wait. You're in it now. It will come back, and at some point it will come back. Now, could it come back because of the trade wars? Maybe. We'll see what China's play is here, because China may decide that we're not going to ease tariffs. We'll stick it to the tariffs, and in return, we'll just devalue the yuan. And if they devalue the yuan, then they're going to start looking to put their money somewhere else. That's probably going to be assets like gold, which they're already doing, assets like crypto. And that could actually, once it bottoms out, fuel the price to go back up. So when you look at these big, Michael Saylor from MicroStrategies, I mean, they're giving outlandish predictions for Bitcoin. I don't even like talking about returns for Bitcoin, because they're just so outrageous and scammy to me. Mm-hmm. It's just insane. But I think when you look at the price of Bitcoin, end of this year, you could realistically see 175,000 to 200,000 for Bitcoin. And it's not necessarily that we have a favorite Bitcoin, or like we've got our hats on with our little pickaxe shouting Bitcoin. We're miners. We're not that at all. We like the volatility. We like the up and down. So it will come back. In my opinion, I wouldn't sell, but I would definitely, we need to talk about your strategy to make sure that you have the right tools to manage the risk when it comes to crypto, because anyone investing in crypto has to understand that there's risk, and it's just how comfortable people are with risk, and getting an education and an understanding how to mitigate that drawdown on assets like crypto, because the tools are there, we have it, and we're crushing it.
Well, at least somebody is. So that's great. Jonathan, thank you so much for being here and explaining a lot of this to us. And, that you're right. I think there's going to be some pain. So I think people right now have to make some decisions about their investment accounts. Like, do you want to keep them where they are? Do you want to roll them into something like what you've got with the Block Trust IRA, where, there's like more strategy behind that to help protect people? People I think right now are looking, especially those of us that are, anybody who's needing the money sooner than later is freaking out, right? It's if you're young and you're just, a lot of people, I'll just wait it out. But there's a lot of people out there that are needing the money today, or they're needing the money soon, and they're thinking, wow, this isn't good. And that's going to be, that's the group that's suffering the most, I think. Yeah. And then we'll see what the rest. Yeah. So
let's hopefully we don't suffer for too long. That's all we can hope for the best, right? And prepare for the best. Yeah. And hopefully people come to the table, these deals get done, and we can go back to more normalville, as we say, and see the market stabilize.
Yeah. Well, Jonathan Rose, thank you so much. We do have links down below for everybody to get to your various different groups, and also to follow you. So thank you so much for being here. Really appreciate your time.
Thank you, Kim. It's a pleasure having me on today. I appreciate it. Lovely talking to you and your audience.
Thank you for watching this clip from the full Kim Iverson Show, which you could catch Monday through Friday, 2 p.m. Pacific, 5 p.m. Eastern, by going to KimIversonShow.com. You'll catch it live. It is free to watch. 2 p.m. Pacific, 5 p.m. Eastern. See you there.